And welcome, Gabor, over to you. Thank you.
Thanks, Matt, for hosting. Hey, everyone. I'm not going to say the good night, good morning thing, wherever you are. Hello. My name is Gabor Gurbacs. I'm the Director of Digital Asset Strategy at VanEck and founder of Pointsville. I represent VanEck in this discussion. And VanEck is an $85 billion asset manager and a pioneer in structuring investment products and more recently, digital asset investment products. So we are in this discussion, we're going to talk about institutional adoption and the past 10 years, and then we're going to spend a little bit of time on the next 10 years and some investment ideas that you guys might want to consider. So let's just dig in. I'm going to try to share my screen. And finally, now that I learned how to use AirMeet, this is my repertoire. So let me just do that. I'm going to share my screen. All right, so I should be sharing my screen, and there we go. So again, today and the next 10 years is the topic in institutional adoption. The first slide I wanted to quickly cover is the last 10 to 12 years. So we started with Bitcoin being effectively created in 08, 09, just out of the financial crisis. And Bitcoin really picked up in 2012. As you guys all know in this call, it was effectively a response to solving problems with the centralized financial system. Beyond Bitcoin over time, in 13, Ethereum came along, tried to add smart contract features to blockchains and digital assets. In 18, we saw different decentralized applications, what are called dApps, and various gaming and financial services used dApps, so decentralized applications. And in 19, mainstream companies and governments and central banks started to adopt digital assets in various forms, including CBDCs. 6 out of 10 central banks announced that they want to create central bank digital currencies. For good or bad, I mean, we'll see whether it's going to be good or bad for the everyday person. From 2020 onwards, I call this era the rise of tokens. Today, we have roughly 9,000 tokens. I believe in the next 10 years, we have a chance to see 1 million tokens. I remember having a panel 5-6 years ago, and I said that we're gonna see 10,000 tokens in 5 years. That ended up being true. So I'm curious if in 2030 we're going to see 1 million tokens or not. But so let's talk about just initial institutional adoptions and developments. So what we should note is that today Bitcoin is available widely. So public companies hold Bitcoin on their balance sheet. You've seen Tesla, Square, MicroStrategy, and other companies holding Bitcoins instead of dollars on their balance sheet to avoid and address any issues related to inflation, just get exposure to the asset class. So public payments companies are offering exposure to Bitcoin, so you can pay with Bitcoin, you can transact in Bitcoin, and in some cases you can withdraw Bitcoin from your online wallets. So the example is PayPal launched a service offering 26 million merchants and 346 million clients some digital asset exposure. One of the bigger pieces of institutional adoption is ETFs. And I think in the opening remarks, just you've heard that a number of jurisdictions are starting to approve ETPs and ETFs. So Canada, Brazil, 14 countries in Europe all have registered exchange-traded funds so that investors can get access to digital assets in their brokerage accounts. Demand has been increasing and improving among wealth managers. A few years ago, it was a career risk to invest in Bitcoin and digital assets in portfolios. Today, it is a career risk not to invest in digital assets. So the likes of JP Morgan, Goldman Sachs, Morgan Stanley, and other wealth managers have digital asset strategies. And many of the large organizations in this panel also have strategists like myself who overview and direct work around digital assets. That was inconceivable 5 years ago. One of the things that you should also keep in mind as you invest, digital asset companies are increasingly going public. So we have a fund, DAPP, which invests in public digital asset companies, 25 names in the portfolio, and the number is rapidly increasing. So today, there are ways to get exposure to public securities and in the digital asset space, and OSL as in the introduction was one good example too of a public security. So why are people investing in digital assets? I think one of the most astonishing statistics that I like to point out that just over the past 15 years, central bank balance sheets have ballooned from roughly $4 trillion to close to $30 trillion today. So as these central bank balance sheets are growing, currency is getting devalued, and people are looking to protect their investments. And the traditional bonds and commodities and some industries are just not as good of a potential protection against central bank failure. So Bitcoin and digital assets are one way to potentially protect against central banks failing. And I believe that one of the biggest risks in for the financial markets and financial security and on the systemic level is central banks failing. A lot of the larger institutions and governments are not recognizing this risks, but savvy investors are, and that's why they are turning to digital assets. So another astonishing statistics just on the same global macro backdrop, while money is being printed and money is getting devalued, there are roughly $14 trillion today that in bonds that offer negative yields. I'm not saying inflation-adjusted negative yields because the numbers would be much higher for those bonds. I'm saying bonds today, $14 trillion of them are basically paying negative interest rates. So you go to your bank in the vast majority of Europe, you deposit money, and it costs money for you to give money to a bank. So that is a world of perverse incentives. It's a world where you go and borrow for your house, for instance, you get a loan out and you get paid for that, but you don't get paid money to deposit in a bank. So digital assets are sort of looking attractive in a world with zero and negative yields. And so that's one of the reasons that digital assets have grown over the past few years. Institutions are seeking yield or try to avoid negative yielding bonds. And this was sort of the past. So that was our past. So what's going to happen in the future? If you remember one statistic from this call, this is your most important one. Roughly $68 trillion, and this is just the United States, about double that globally, is going to be passed down from the greatest generation and baby boomers to Generation X, millennials, and Gen Z. So there is about $68 trillion in motion, and it's going to the hands of investors, young people who are investing in Bitcoin, digital assets, esports, and thematic investments. So as you're looking for investments and what drives digital assets, this is one of your main things. There's a lot of money in motion, and the new generation of investors will invest differently. The new generation of investors will invest in digital assets and thematic investments. Some other cool stats that you might not know, about 50%, so a little bit sub 50%, but by 2024, over 50% of all e-commerce transactions are expected to be driven by mobile wallets. So that means roughly 20% credit cards and 12% will be driven by debit cards. The world is going fully to digital wallets and digitization. Today, roughly 40% of payments in China are already digitally kind of driven from wallets. Only 17% in the US, a lot of opportunity to grow in the digital wallet space. One of the reasons, again, for digital assets that we see growing is because the increasingly wealthy younger generation is using mobile wallets in e-commerce transactions, all of those areas that are growing. And the demographic background for all of this, and I bet many of you don't actually notice in the group, but 1/3 of the world today is under 30 years of under 20 years of age. So literally 1/3 of the world is under 20 years of age. This generation will not know wire transfers. This generation will know online wallets. It's a fully digitally native generation. Even more shockingly, another roughly 30% of the world, so 2/3 of the world, is basically 1/3 of the world is between 20 and 39 years of age. This is a mostly digital native generation. So roughly 2/3 of the world is digital native and is increasingly using wallets. As money is being passed down to this generation, all of commerce is going to go to the digital asset space in some form. And that's why I usually say that the next 2 decades of digital first experiences will lead to significant growth. What are some of the areas that will grow? I believe collectibles is one of the areas that will grow. So digital experiences, things that are unique. You can go to a sports game, get a collectible, you can get rewards, and your rewards will grant you a free cup of coffee. And everybody is going to be able to create digital tokens and collectibles. We will live in a world with millions of tokens. And the interesting part of that world is that you control your own economy, your own community, and you'll be able to raise money in a very different way and interact with your favorite brands. The company that I run called Pointsville works with pension funds, works with financial institutions, and we even have a geothermal association and taxi and restaurant companies opening up the world for the opportunity to create tokenized experiences for anyone. So I believe in a world that will have millions of tokens. There's a lot of new financial infrastructure that is built today on DeFi or decentralized finance. Usually what this means is that there are more efficient ways to do business than the current centralized model. There's a few trends there. For instance, is lending. So there's a lot of lending against digital assets. So you hold your digital assets and you get fiat money like the dollar, euro, or CNY against that. And there are credit cards now that are denominated in cryptocurrencies, and that will actually in time replace a good bit of fiat currency transactions. Social trading is another trend that is increasingly popular. So you talk with your friends, you trade stocks and crypto with your friends. One good example is eToro, and it allows basically the copying of different trading behaviors and successful traders on a platform. So social trading, when you trade with your friends and interact with your friends, will become more and more prevalent. To many of you who are calling in from various countries in Asia and some of you from China. In China, you have Alipay and WeChat, which is an integrated social and financial platform. We believe at VanEck that we're going to see some of those examples in the West. So social trading, decentralized infrastructure, NFTs and rewards will be all in one platform down the line. As I mentioned, one of the areas of interest and for us is literally interest, which means that you are able to earn yield on crypto today. You're able to earn 8 to 9% on just stable coins, which is much higher than what you would traditionally earn on fiat currency deposits and money market funds. So we believe that the earning and interest kind of products will be very popular, and my firm has offerings in that space. We think that CBDCs will be a reality. So some of the central banks will actually build a digital currency. Singapore and Hong Kong actually are leading in this space. And then we also believe that there's going to be political developments that will further legitimize digital assets. We have seen El Salvador adopting Bitcoin as a legal tender. Additional Central and South American countries that are contemplating adopting Bitcoin as a legal tender. And we believe that this will be potentially transformative, and it will be transformative for the entire financial industry, because much of the services that we provide today will likely be decentralized, or if not, new service providers who are providing more technology forward services will replace those providers. So again, just to close, and I think we can close a little bit early and just do questions. I wanted to go back to the slide and remind you that 1/3 of the world is under 20 years of age, and another third of the world is between 20 and 39 years old. So there is about 5 billion people who are digital natives and have the chance to adopt digital wallets. So there's a lot of growth in the space. And this new generation will have a lot of money. There's $6 to $8 trillion in motion just in the US, and another roughly same amount of money globally that is being passed down to the younger generation investing in digital assets. So that's kind of my, these are my slides. I'm happy to share them on digital assets. This is your stat to remember, the $6 to $8 trillion in motion. I'm happy to take questions, and obviously I don't want to spend time on just product pitches from my company, but if you're interested in our work in exchange traded funds and digital assets, then feel free to ping me. I'm on LinkedIn, I'm on Twitter, and I'm happy to share my email with anyone who is listening on this call. Thank you.